Okay, guys, so today we are going to be talking about chart trading, basically, okay? How to read a chart. Because I know a lot of times, as new trader or anybody who's interested in trading, always think about, okay, this chart or the candlestick or whatever is on here, these green and red lines don't make any sense to me. And I get it. When I started trading myself or when I was interested in trading, when I began trading, I didn't know how to read candlestick. I didn't know um, why the candlestick was red. I didn't know why the candlestick was green. I didn't know all these little wicks on here. So what we're going to do today is that we're going to do an unedited version or an unedited video here today, just basically explaining, the ABCs of charting. Because the same way that if you wanted to form paragraphs, first thing first you have to do is to learn the alphabet. If you forming a paragraph in English, you first have to learn your alphabet, and then secondly, you have to learn how to create words, and then you create sentences, and then you go to paragraphs. So the same way, I get it. A lot of times, like I said, when we're starting trading, we don't know exactly where to start. We don't know how to read a candlestick. A lot of people just like, that's too hard. I can't do it, so I'll just let somebody else do it for me. Okay. That's a okay route too. You can take that, but today we are going to be talking about candlestick. Like I said, it's unedited, so we're not going to have things popping in here. This is almost like a live video, basically. So first thing first, when we are talking about chart, these trading chart, we want to talk about the candlestick. How do you know the candlestick is bullish or bearish, or how does that even, like, what determines that, right? So let's start first of all with a bullish candlestick, right? So these thick green part of the candle, first of all, this entire thing right here is called a candlestick. Okay, I'm explaining this like this is your first time seeing a chart and you don't know what the heck is going on. That's why I'm doing that's why I call it ABC of trading, right? Of charting. So these big green bodies, this entire thing right here is what you call the candlestick, basically, right? This is a candlestick. Now, this thicker part of the candlestick, the entire candlestick, that's what you call the body. Okay, so this is the body. Number one, the entire candle, the entire thing here is called a candle. And then number two, this thicker part, because there are these two parts to it, the skinny one and the thicker one, right? And the thick part is called the body of the candle. And then this little tiny one right here, this is what we call the wick, right? And we'll name these things, and then we'll go a little bit deeper into what they actually mean, how they form, and all that kind of stuff like that. Okay, and we'll try to kind of keep the video short so it make more sense, and then we can produce more if you guys ask for more depth or in-depth videos and stuff like that. So like I said, right now we know that this thing is called a candle. It's not called something else. You might ask, why is it called a candle? Maybe it looked like a candle. I don't know. That's probably why somebody named it a candle. And then, like I said, right, the body, we got the body of the candlestick, we got a wick. And this is the wick. Now, you see how this wick here happened, right? So in order for a candle to be considered a bullish candle, that means the price, the close price is above the open price. Okay, now how do we know? Because here when this candlestick, okay, before we go to that, if you can see up here in this corner, the time period on here, what you see is 1 inch. That means 1 hour. Okay, what that stands for, what that means is that every transaction that happened in the market or in the NQ, as you can see up here in the NQ December contract, within 1 hour, this is exactly what happened, buying and selling and people holding and doing all kind of stuff. Within one hour, this is the history of the transaction that went on. Okay, and we can change the time frame here. So also we can go on the daily time frame, and we can also see here that within 1 hour, within one day, within one trading day, this represents the transaction, the buying and selling and holding that happened in the NQ market December contract. Okay, so, and we can do the same thing too. We can go to 1 minute, we can go to 5 minutes. The candlestick basically going to change sizes based on the time frame. Okay, so we have to keep that in mind. Now we're going to go on a 1 hour chart, and that's what we're going to do our thing. Okay, so we'll find a bigger candle and we'll split this on there. So as we see here, right, like we stated earlier, the candle is considered a bullish candle when the close price is above the open price. So what that means is this entire candle right here, when the price open after this last 1 hour of transaction happened, when the price open, when the new price of that 1 hour open, that open right below here. I will mark that. So it opened just right around what we call it, $20,513.89, or we'll call it $20,513. That's where the new transaction, that the new 1 hour transaction, that's where it happened. That's where it began from. And then now this wick, right? So this wick, when it tells us that when the transaction here happened, there were a lot of seller that pushed the market all the way down here. Okay, and because the buyers overpower the seller, this pushes the market all the way up here. I'm going to let that sink in, or I'm going to explain it again. So why did this happen, right? So the wick happened because when the bullish candle, when the market opened here, the new 1 hour transaction, when it began at 20,513, sellers were in control for a little bit. This is what the wick is telling us. It's telling us that, okay, when the market opened here, somehow, whether the candlestick came all the way up here, but it tells us that in the past, sellers were in control and they pushed the market all the way down here. However, because the bulls or the buyers were still in control, they were able to push the price all the way up here and close it all the way up here. Okay, guys. So in order for a candlestick to be determined bullish, that means the current price or the close price is above the open price. Now we're going to find a bigger candlestick here and do the opposite to that. With a red candlestick, how do you determine that it's a bearish candlestick or it's a candlestick that ended up red? Well, you can use any color, right? Basically, people just use red and green because we associate that with positive and negative. So how do you know that the candlestick closes below? Because I don't know how you can tell, right? It look like, so it's like exactly as what we explained, but the opposite, right? So it tells us that, remember, in order for you to know a candlestick is bullish, that means the close price is above the open price. Now it's the same thing here, but opposite, where in order for you to know that a candlestick is bearish, it tells you that the close price is below the open price. So just as the bullish candlestick right here, where it opens down here and then it closes above, it's the same way where this price action right here began 1 hour again, guys. It begins right here, and it tells us with this wick tells us that this is history. This is trail, basically, right? I call it trail. This is trail telling us that, hey, when the market opened right here, the bulls were in power, or the market could have came all the way down here and then went all the way up here, and then what? Guess what? It ended down here. So this tells us that when the market opened here at just about 20,500, the bulls were in control. The market went up here. However, at the end of the day, or the end of that hour transaction, the market closes below, just right around 20,461. Okay, so this is how we basically determine that a candlestick is bearish or bullish. Like guys, let's go over this again. Remember that a bullish candlestick or green candlestick is determined by the close price being above the open price. Now I'm putting this in a very simple way, okay? Because I want us to understand this. Like just watching chart and like trying to put things together is very hard. It's already complicated. Some people say, but I'm going to try to explain it in a very simple way again. And also on the flip side of that, a bearish candlestick is a bearish candlestick when the close price is below the open price, as we show in the video. Okay, guys. So I think that is basically the the generic explanation or the very simple explanation of how you determine what a candlestick is. Okay, and then also knowing, like, you might see the candlestick. Okay, now you understand how to know a candlestick is green, what made it green, and knowing the wick and all that kind of stuff like that. So after you determine that, you might be asking, well, I already know this, but how do I find a trade? How do I enter the trade? I see a lot of times, like if you can see on here, I'm using a simple moving average, basically telling me that when current price is above the simple moving average here, it encourages me to buy, and when the same way opposite, when it's below, it encourages me to sell, right? So it's the same way here, but at the end of the day, what a lot of us retail traders really look at is support and resistance. I always make this analysis where I'm from, out in the field, when people are harvesting rice, there are people who don't have farms or don't have the means, so they walk behind these people, and whatever bunch of rice they are gather, the rest of the small that falls on the ground on their way to harvesting rice, there are people behind and picking them up little by little by little, right? So how do you determine, okay, where to enter a trade? How do I enter the trade? How do I find a trade? It's very, very simple if you can stick to it. It's support and resistance, or we call it supply and demand. Okay? Because every transaction you see here, whether the 1 hour time frame, the 1 week time frame, the 1 month time frame, the 1 minute time frame, with these big moves in the market, the bigger the candlestick, in my opinion, the better your chances are of knowing exactly where the market is moving, or I mean, who's in control, basically, right? Like if you see a candlestick moving this big, you know that the market is in a big swing. Like people are taking big profits and people are entering trades with big amounts. So what we try to do is first try to find a trend of the market to see what direction the market is going in. In the previous video, we stated in there that a trend basically gave us what 3 steps, right? Or 3 points. I'll find a perfect trend here for us so it can make sense to us. Basically, that 3 point is 1, 2, 3, 4. It's 3 point, right? So it's So from here to here is 0, 1, 2, 3. That's 3 points, right? So lower high, lower low, higher high, lower high, lower low, higher high, lower high, lower low, higher high, just like that. Very easy, right? So now, again, like I said, in order for us to find our trades, we have to find these big moves. Like I stated in the story I just told you, there are big money and big banks or people with a lot of money that participate in these markets, and we can track them without personally knowing it. How do we track them? Like I mentioned earlier, support and resistance, or supply and demand. So supply and demand. And how do you find supply and demand? You look for the biggest move that have previously happened in the market, and you wait at those junctions or those points. That's where you want to be looking at and placing your trades. And if you want to basically understand more where exactly to enter your trade after you find these points, go back to my previous video. You will see I got a whole video dedicated to that, and I'll be making more advanced videos on that to tell you exactly where to enter your trade, where to have a stop loss, and if you are in profit, where do you move your stop loss? How do you protect profit? How do you get out? What determines you to get out, or what should you be looking at if you want to get out of a trade with profit? So, but I think that's it for today. First thing, we learned the ABC about candlestick or charting. Like we said, in order for you to find trades, you first got to know what a green candlestick mean. How did it turn green or turn red? You can use different colors, but what is considered, maybe the better way to put it is what is considered a bearish or bullish candlestick. So we learned that today, and we also mentioned or learned that in order to find good trades, you want to be where the money is. That means finding these support here and demand. Supply up here, I'm using different terms, too many. I think they all just mean the same thing, but too many terms. So demand right here, and then supply up here. So if you want to be going long, like for example, right, we can look at a few other charts too and like go into it, but this video is getting lengthy. So if you see what happened here, like I just mentioned, like the market jetted off of here, and then what happened, it danced around a little bit, came back here, it gap up, and then came right back here for a retest, and then went right back up. Now what this tells us is the fact that, because what happens in the market basically is that when big companies who got millions and millions of dollars, when they are filling up orders, they can only buy limited amount of orders at a given time. Okay, so they buy the orders in increments. So they buy and then they wait, and then they buy and then they wait, and they buy and they wait. Now you may ask, how long does this take? It can take years, it can take months, it can take few hours, it can take few days, right? But what we want to be looking at are these kind of things where, if you see here, for example, first the market jetted off of here, right? The market came off of here, big candlestick happening, right away got pushed right back. Guess what happened right here? It bounces right off with a big gap on Sunday night when the market reopened for the new week. And then the market went all the way up here. It got double tapped there, and then it grinds its way down all the way here. And when it got here, it got wick. In fact, today, even though I didn't trade today, but when I saw this, I was like, this is going to be a 200-point move day today. And that's what happened, right? So this is exactly how I would draw these three here. So these are the kind of points that you want to be looking for as a trader. Right here, you want to be looking down there. And these two right here too, you see? Right? So you see this over time, right? Now, I'm not saying it's going to work 100% of the time, but if you stick with it and you have a great risk management, I think you're going to be profitable, right? So you see this, right? Market came, jetted out of here, bounce, came back, bounce, came back, and the orders are getting filled. Remember when I said they have huge quantity of orders and they can't fill one just at one single time? Now this is going to keep happening, right? And this is, in order to find these things and do everything, you have to have a combination of things that you are looking for. Okay, like if you are in the market and part of your strategy said, once you see a big wick in a demand zone, you know, confirming with past history, like here and here type stuff like that, you should be buying. You probably are going to make a lot of money right here today. This, with this kind of big flow in the market, where the market, the candlestick open right here, the price action open right here, and then went all the way down, market open, and then it just jetted right back up. You see this big candles, this big wick happening. This huge wick, actually they give an indication or tells us of a change in the market structure, basically, sometimes. Okay, so like if you see this here, you'd be like, uh-oh, people are either taking, you know, going long, or people are taking profits, or something's going on in the market. So you got to be watching out for these things. But I'm going to cut this video right here. It's about 18 minutes now, 18 minutes into the video now, or 19 minutes. I'm going to cut it right here, and peace out. We're going to be coming out with more videos. I'll try to keep it very, very simple. Like you see my chart, I don't have a lot of stuff on there because I don't want people to be thinking that, oh, trading is so hard, I can't do it. Look at all those lines and numbers, and that's not really what trading is about. I think that really boys, I mean, some of these indicators, called an enhancer, they do help, but these indicators, you know, they gotta follow price action sometimes. So I just do basic price action trading, and then I just call it. So peace out. God bless you. I'll see you on the next video.